Good morning. Welcome to our third edition of Talk at 10 from our studio with a Wembley backdrop, many might say the heart of West London. You tune in as our business community works like never before to rise to the challenges of this pandemic. From Dyson endeavouring to build 10,000 ventilators, to Microsoft helping home educators making Minecraft available free for young people at home, through to locally Brompton Bike Hire making free bicycles available to NHS workers. This is an extraordinary effort against an extremely tough backdrop. It can't have escaped many of your attention. The headline just yesterday evening in the Financial Times that some 500,000 new benefit claimants have come on stream in just the past 9 days. And of course, terribly, sadly, 20,000 global deaths have now happened as a result of the pandemic. I think all of our hearts go out to the friends and families of the deceased. At West London Business, we are continuing to make every effort on the part of our team to make sure that the very best and most relevant business advice is available. And a reminder, we're bringing up on screen now, I think, the website address that you can turn to, tinyurl.com/WL coronavirus, which our team is updating daily, as I said, with the very best advice on a whole range of business issues that I know you're grappling with at this time. So let's get down to business. Over the past week or two, the government, by my latest count, has established over 9 schemes to support businesses. And so the themes that we'll be exploring this morning, we'll start off with grant funding support. Then we'll turn to the Coronavirus Business Interruption Loan Scheme. We'll move on to tax relief options, statutory sick pay rebate, the Coronavirus Job Retention Scheme, and finally insurance. So lots for us to pack in over the next hour. Now, as always, on these programmes, I'm joined by an expert panel to talk us through their take on business sentiment at this time, but also, I think most importantly today, the emerging solutions. And we're going to dive straight into a lot of the detail, which I think many of you are trying to navigate at this time. So on my panel this morning, I've got Caroline Bevan, who's Senior Partner for West London at PwC. I've got Sharniya Ferdinand, who's Business Inclusion Programme Manager at Natwest. Robert Moore, who's Managing Partner at Grahame Murray, and Jamie Barham, Client Director at insurers Verlingue UK. And of course, as in previous webcasts, throughout the programme, Pim will be monitoring your questions live on our YouTube channel and bringing those back to our studio guests. Now, if you're concerned that we've missed any of your key questions, don't worry. We've got a lot to cover, a lot to pack in this next hour. We will be gathering those questions up and making sure that our panellists get a chance to respond and follow up, and we'll both make those responses available on our website and circulate by email to viewers. So without further ado, I'd like to bring in my first guest this morning, Caroline Bevan. Caroline, I've no doubt you're talking to lots of businesses at this time. I wonder whether you could share a little bit about what you're hearing.
Yes, absolutely. And first and foremost, Andrew, thanks very much for the opportunity to come and join the slot this morning. You very kindly introduced us all as experts, but never was there more a time when we were all learning together, actually. So yeah, really appreciative of the opportunity to come and share some of what we are learning and what we're hearing. But I mean, stepping back from that financing question, which I know is the focus of this morning, as well as the really serious implications for people's health and healthcare services. Clearly, COVID-19 is having a significant impact on businesses and the economy more generally. On a personal level, as you've indicated, I'm certainly spending a lot of time just talking to my clients and talking to businesses of all sizes, both about the human side of what's happening in the world. So, people juggling personal concerns for friends and family with immediate challenges of schooling, for example. And then alongside that, some really fundamental around a number of quite consistent themes, actually, which I would define as crisis planning, effective communication, workforce, supply chain, and also information or data. It comes down to data nowadays, doesn't it? Certainly many organisations do have crisis plans in place for workplace and supply chain in particular, but what we're increasingly seeing is that COVID-19 is unveiling flaws in those plans. These are plans that have been in place successfully for quite some time. Many companies are having to plan on putting production lines on pause, with then the associated potential impact of asking employees to temporarily stop work. And I know you're going to cover the government's coronavirus job retention scheme this morning in response to that. A number of my clients are in the travel and tourism sector, which has obviously been ground to a halt. And others in retail and consumer, for example, are similarly hit hard. So no surprises in that summary, I'm sure. And of course, underpinning all of these themes one way or another is that same challenge. And in particular, people worried either about their own income stream or liquidity more generally in their business. And I know that goes right to the heart of what you're covering in the slot this morning, Andrew. Certainly the government... sorry.
Absolutely, Caroline. I'm certainly conscious that in all the conversations I've had over the past few weeks, the cash question and kind of maintaining liquidity in everyone's business, I think is front and fore of everyone's minds. Now, I think we're going to bring up on screen a bit of a summary of the grant funding support that is becoming available, and I wonder whether you could just start to give us a flavour of, for perhaps retail, hospitality, and leisure, what that's looking like.
Yeah, absolutely. And actually, before I go into the detail, with that volume point in mind, Andrew, I was just going to reference a business support website that has been set up by the government, which gives further information on all of the measures that you're going to talk about this morning, and certainly indexes really well these grant measures that you've got up on the slide at the moment. So for anybody who hasn't found that website, it's www.businesssupport.gov.uk, and I think people will find that a really helpful resource. I'd also mention that at PwC we're continuing to invest in a guidance section on our own website, which people are really welcome to reference as things move forward. But in terms of those grant funding support measures, I mean, these are a few of what I would call the tax and grant-based initiatives which the government have put in place really to alleviate cost pressure and to help preserve cash. And I know you're going to come on to the tax measures shortly. In terms of these particular grant funding support measures, I won't read the words on the slide because I think you've set up the detail of those measures really well. What I would say is that from a process perspective, in terms of accessing some of this support, particularly the cash grants that you've got in your first bullet point, and also the business rates holidays and the small business grant funding, the ball is initially in the court of the local authorities in terms of assessing eligibility, which is perhaps a relief in terms of simplification for people who will be hoping to access some of this support, although also it raises a timing question, doesn't it, in terms of when that support will be made available. So as I say, there's nothing proactively to be done initially in terms of accessing these things, and I'd really encourage people to have a look at that business support website if they want to read up a little bit more and or raise queries with their local authority in terms of what's happening and when. The last bullet point on your slide is slightly different. You've referenced there the corporate financing facility, which I would say falls into the second category of financing support that's been announced by the government, and we are referring those as the funding-based initiatives. These are really aimed at bolstering cash flow and liquidity in the short to medium term. And this first one that you've referenced there is really aimed at the very largest businesses. So the likes of the FTSE 100 businesses, though I'd note that you don't have to be listed to qualify. If people want to have a closer look at what's involved in that facility, I'd refer them to the Bank of England website, although it is so narrowly targeted that I suspect that it won't be of much use or relevance to many who are listening in today, unlike the other grant funding support measures that you've got on your slide there. I mentioned that there were two financing support initiatives that we've got in the funding bucket. The other one is the coronavirus business interruption loan scheme for SMEs, which I know you're going to ask Sharniya to say a few words on in a moment.
Yes. So Caroline, can I pick you up? If we we can take that slide down, I think, for a moment, because we're going to unpack that more, as you said, with Sharniya. But I think the point you raise around our reliance on local authorities is critical, because clearly our business rates teams in our local authorities are going to be under huge amounts of pressure at the moment, sort of trying to mobilise all these changes to their processes and what's on offer. But is my interpretation correct that these cash grants might be received automatically by the eligible businesses?
Yes, that's certainly the inference, isn't it? And as I say, we're all learning in terms of how this is going to work on the ground. But that's where there's almost a moment of relief about the simplicity of some of this, in that it is automatic. My interpretation of the guidance that's been put out is that eligibility will be determined on an automatic basis, and then there will be a simple application process that follows that. But you'll be invited to apply.
Thank you. And I suppose just to emphasise, with our West London business website, tinyurl.com/WL coronavirus, on that page we're kind of linking to the local authority sort of information on their business rate schemes as it becomes available. So I think quite an important group of links to kind of keep your eye on if you're wondering what the timing might be from our 7 North West London boroughs. I also noted, of course, you flagged the government's business support website. All I'd sort of add to that is I'd urge patience on the part of anyone that tries calling the business support helpline at the moment, because it's impossible to get through. But that's of course why many of us, PwC included, are trying to create web-based guidance that is perhaps easier to access than telephone support just now. Well, thank you for that sort of overview, Caroline, of the grant funding support. I think I'd like to bring in Sharniya now, who joins us from NatWest, and is sort of really, I think, flying the flag for the banking sector today, as well as NatWest. And I think clearly our sort of friends in the banking community at a local level are incredibly important points of contact for our business community at this point in time, particularly as we wait for some of these government grant schemes to come into place. So welcome, Sharniya. I wonder whether you can tell us a little bit more about the coronavirus business interruption loan scheme that Caroline mentioned, and we'll bring up the detail on screen.
Yeah, well, thank you so much for having me this morning, first of all. As Caroline mentioned, it is obviously quite an unprecedented situation, so we're learning as we're going, but our teams are working incredibly hard to try and support as many customers as they can, as fast as they can. With regards to the coronavirus business interruption loan scheme, which is very, very long term, essentially the eligibility, which I think is what people will probably want to know more about, is you need to be a UK based business. You need to be applying for the loan for business purposes. They will look at, you can apply for up to a maximum of £5 million, and the loan will run for a period of 6 years, or up to 6 years. With it, there are no sort of early repayment fees, there are no setup fees. And what the scheme does is provides the lender with a guarantee to say that if the worst were to happen, we would be able to reclaim 80% of that borrowing. So it just gives us a bit more flexibility in who we're able to help. First port of call, all banks will look to be able to lend under normal terms as they would, and if the business is eligible to be able to lend as they would have pre-coronavirus outbreak, then that will be done. However, if you aren't able to fit into those parameters, that's when we can then look to use the business interruption loan scheme as a method of support. The proposal that you put forward to us will be assessed on the basis that had the coronavirus outbreak not happened, the business would have been viable and that you were able to cover all of your liabilities anyway. And we'll also consider sort of the longer term impacts of this on your business. So ideally, what we're looking for is businesses that, had this not happened, would have been viable. And equally, once we're able to provide that support going forwards, within a period of time, your business will be able to go back to trading normally. Most industries and sectors are able to apply for the loan, and I think a really good website for an overall view of it is the British Business Bank website, because that tells you a little bit about the eligibility, but also which banks will be able to apply for the scheme. And in the first instance, we are saying look to go to your own bank first of all. However, if your own bank isn't able to support you, there's nothing to stop you applying with other lenders, but in the first instance it just makes sense to go with your own bank initially.
Thank you, Sharniya, for setting that out so clearly, and I'm sure probably of all these schemes, one that so many businesses will have been focusing in on really closely in recent days to try and maintain the cash flow they need. But how are you kind of coping really with I imagine a huge volume of inquiries coming in?
So there is a massive volume of inquiries coming in, and it is, as we said, unprecedented. And one of the things that I would advise or urge business customers is look at, do you need something urgently? If you don't need it right this second, maybe try to wait a couple of weeks before you apply, because we are trying to prioritise those who have the most urgent need. But as you commented earlier, our phone lines are absolutely jam-packed and people are finding that they're not necessarily able to get through. So I would really caution businesses to kind of look at kind of their cash flow, and if it's something you need straight away, then definitely get in touch with your bank. But if you are able to last a few weeks without that, it may be worthwhile waiting until we've helped some people, so that there is more capacity to help those who will need this help later on.
Thank you. That's really helpful reflection. And I imagine where businesses have got, the email or even mobile contact numbers of their relationship managers, they're reaching out by those means as well.
And of course, and it's completely understandable. As I said, our relationship managers are working really hard to try and help as many people as fast as they can.
Thank you, Sharniya. Now we're going to turn to Pim for a moment, just to get a flavour of some of the questions that have been coming in from our viewers on YouTube. What's coming through, Pim?
Hi Andrew, haven't had any questions this morning so far, at least that I can see, but we did have a question previously about grant funding. I'm not sure if perhaps Caroline might be able to answer. Somebody said, are there criteria in terms of eligibility and accessing grant funding for businesses who do not pay business rates?
That's an interesting question, because in terms of the guidance that's been put out, it's all reflected back on business rate status. So I think people who find themselves in a situation that doesn't fall within the obvious guidance and definitions that have been put out probably need to raise that query direct with the local authority, which will be difficult initially because of the volume of queries that they'll be getting. But that would be my best advice to somebody who doesn't obviously fall within the guidance and definitions that are out there.
And certainly, Caroline, our strong impression from the Talk at 10 programme on Tuesday, where we had input from Councillor Julian Bell, the leader of Ealing Council, is the huge efforts that local authorities are having to make at the moment just to make sure that people are fed, and that food distribution networks are quickly and successfully put into place. It's worth noting that when we look across our 7 boroughs, the one borough at the moment that seems to be sort of independently launching their own grant scheme is Ealing, and they seem to have a sort of fairly flexible scheme that they've announced in the past few days. There's information on westlondon.com, and there might be some businesses that are perhaps fit in a kind of essential services bracket that don't have that business rates link, that could access that support. So I think we'll be interested to see whether some of the other local authorities in North West London and beyond follow Ealing's lead and put similar schemes in place. Now I'm going to turn next, I think, to Robert to start to help us navigate tax relief, which probably isn't usually something that we get out of bed in the morning for, but in these times with the huge pressures that so many firms are under, I think everyone is looking at the small print. So good morning. I was going to say good morning, Robert, but actually Robert seems to have disappeared from our live studio, so I'm not going to be able to cut across to Robert at this point. But I'm glad that we have Caroline still with us, and the Caroline's link is on. So I'm hoping that Joel in our studio will be able to bring up on screen the tax relief slide, which gives a sort of headline overview of some of the different options, from time to pay to VAT deferral to income tax deferral for the self-employed. And so I wonder, Caroline, whether you can kind of just talk us through those options.
Yeah, sure. And again, I mean, I won't read the words on the slide because I think they articulate really well some of the measures that are being offered. But I mean, broadly on the tax side of things, again, if I try and bucket these up because there's a lot of detail, there's a piece around whether people are able to defer tax liabilities and therefore minimise costs in their business. And there's also a piece around whether people are able to accelerate incentives. So I don't know if somewhere in your slides you reference R&D, for example, but certainly a conversation we're having with clients at the moment over and above some of the core measures is where you are entitled to a cash relief, as it were, which is potentially a cash inflow into your business, whether there is a way of accelerating getting that relief into your business. But if we look at the measures that have been introduced, it's really all around alleviating pressure on cash flow. So time to pay, you see as a sort of a headline initiative from HMRC. And what we're finding is that where our clients are phoning up and sort of making a verbal application and a verbal case out for deferring outstanding tax liabilities, HMRC are being as helpful and supportive as they possibly can be. So I think when people are looking at the cash levers that are within their direct control, it is worth having a look at your tax position to see what there is there that could be deferred, because as I say, HMRC and the government are certainly looking to be as helpful and supportive as they can be. I can see on your slide you're referencing the V80 deferral measures that have been introduced, which are automatic. I mean, VAT deferral measures are only useful if you're in an actual VAT payment position rather than overall recovery position, but certainly if you are in that position where you've got that outflow, that cost in your business, there's something there which again is low hassle for you because it's something that should be automatic within the system. Again, sticking with stuff that's almost been taken out of our hands and done for us, you've got the income tax deferral there at the bottom. So quite a few measures there that the government have sort of introduced on the tax side to try and alleviate that immediate tax leakage out of taxpayers' bank accounts.
And just to get into the nitty gritty, I mean, I think it seems to be pretty straightforward on the VAT deferral that's automatic, and I think there is clearly a need for caution around cancelling direct debits. So because I'm assuming you have to notify still what your VAT contribution should be, you just then hold off on the payments.
Yes, I think that's right. Although again, there's such a volume of information that's being exchanged here between taxpayers and the authorities. And so while there are these steps in the process and you do need to go about things in the right way, I would emphasise just how helpful and pragmatic the authorities are aiming to be at the moment.
That cancellation of your direct debit does seem quite important, so you don't get a nasty surprise when you think it's all
absolutely
it's all okay. And on time to pay, presumably that starts to cover national insurance contributions. Would that potentially cover both a transfer of employee as well as employer national insurance contributions to HMRC, do you think?
Possibly, yes. I mean, as you said at the start, we're all just learning really around how this is going to work in progress.
Yeah, but clearly on the national insurance contributions front, that is where you need to be getting on the phone to HMRC and having that time to pay conversation.
Yes, agreed.
Now, I think we're still missing Robert. Unfortunately, he's had bad luck with his computers this morning, sort of blowing up around him. So I think we're going to move on, Caroline, to the statutory sick pay rebate option, which I think again, is just this part of this long list of different options that we all need to explore now and contemplate the value for our particular organisations. And I think we're going to bring up in just a moment on the screen that sort of scenario, and also kind of how you access it. Do you want to sort of talk us through that one?
Yeah. Although I would say that beyond the headlines, it's we're at day one in terms of helping people through the practicalities of that. So as your slide says, eligible employees will be entitled to statutory sick pay from day one instead of day 4. And there's a sort of reclaim process for up to 2 weeks sickness absence due to COVID-19. The eligibility is for small and medium-sized businesses and employers with a workforce of less than 250 employees. And I would assume that it will be through the normal sort of dialogue and application process with HMRC that you would access that.
Yeah, and this is one of the areas where the government seems to also have made adjustments so that employees would effectively be eligible from day one if they're taking time off because they need to recover from coronavirus,
yes.
Which I think seems like a very sensible move to encourage people to stay at home, as all of us need to do now, unless we're doing critical roles or we absolutely cannot work from home. But so I suppose in practice that means for employers paying that SSP to your employee, so they've got some income, and then it seems to be suggesting over the coming months then kind of clawing that money back from government.
Yeah, and you come to a good point there, Andrew, which takes us back to cash flow, doesn't it, in terms of when the reliefs kick in versus when costs are being incurred, which I'm sure is something that's high on people's mind.
Indeed. And I suppose in a lot of the discussions I've been sort of having both with our members and sort of micro businesses in West London, I think the plight of the self-employed is I think rising in terms of the volume of concern that's being expressed as to what the self-employed do as we see this rapid sort of shrinkage of our economy. Clearly we've talked about the potential for income tax deferral. Do you have any thoughts on sort of that self-employed discussion and sort of what the Chancellor's got to try and unpick at the moment? Because it seems very difficult to design a scheme that will work.
Well, I think that's right, and sadly I don't have any sort of inside knowledge or prior insights that I can share with people this morning. I mean, it has been clear over the last few days, and I mean, it's been all over the media, hasn't it? You know, that kind of gap that was potentially being left, which meant the self-employed in the country were exposed. So great to see reports coming through that the government have managed to assess that, and we sort of wait with interest to see what measures will be offered.
Indeed, and my sense is that we're probably going to get an announcement there in the next few days, because I think people's patience is rapidly running out in that regard.
That it could be as early as today, actually. So we will we will watch with interest. I know from the discussions that we're having with the government that it's been high on their list. They're very acutely aware of the challenges and that important gap.
Yeah, but clearly very, very difficult to kind of design a model that kind of fairly assesses what someone's sort of past income looks like as a self-employed person, and then also kind of targets self-employed that really need that support and don't perhaps have significant cash savings in their bank account.
Agreed. I mean, the challenges that are facing the government at the moment in terms of coming up with these packages and coming up with offerings that are fair and pragmatic. I mean, the challenge is just enormous and unprecedented, isn't it? So no wonder that it's taking some time for these measures to come through, and that understandably there are gaps, I think, in some of the detail at the moment, which will be filled as we move forward. There's just so much to be thought about.
It is, as you say, it's extraordinary and unprecedented, the speed that this is all having to be worked through, which I think leads us perhaps into a scheme that has been very actively discussed in almost every conversation I've had with West London business leaders over the past, I suppose, almost week now. It feels a lot longer, but it was just last Friday, I think, that the coronavirus job retention scheme was launched, and really a very radical proposition. That I think we're bringing up on screen now as a summary. Do you want to just sort of talk us through that, and also this idea of furloughing, which, yeah.
It's not the word that previously was used in everyday conversation, was it? But I mean, this job retention scheme is almost the glue in the middle that so many businesses are waiting to fully understand. If I go back to my hotel client that I referenced earlier, I mean, they've got to a position where they have communicated with their team that actually furloughing is going to be the way for them to make sure that they're ready for when business becomes back online again, and do the right thing by their workforce. So they've had conversations in principle about furloughing being the way they're going to go, but still so many questions around legally and financially what this is going to involve. So I think we're all familiar with the headlines, and again, your slide articulates it well, that the intention is that the government will cover up to 80% of the current wage level of an employee who has been designated as furloughed because of the COVID-19 pandemic, provided they're kept on payroll. And they've obviously announced that ceiling of $2,500 a month per employee, which is 80% of a gross calculation they've done. Again, looking to be fair and consistent in terms of what's a reasonable ceiling for them to apply. Option for employers to still top up salaries above that level if they choose to. So the scheme at the moment is expected to last for at least 3 months, potential for it to be extended. But unfortunately, we still await much of the practical detail around this scheme is going to work in practice. What I would say on this really important point in terms of that detail is that we do expect it through any day now. Certainly this week, we're expecting more detail through, which will enable us to help businesses understand practically what they need to do to implement this properly and make sure that contractual obligations, legal obligations, payroll, all of that is implemented properly, so that staff can be furloughed in a way that's fair to them. And as you've said, Andrew, encourages people to do the right thing by their workforce, in terms of staying at home where that's appropriate, and also keeping people in work.
And certainly this whole area of redundancies, and we started the programme this morning reflecting on the sheer scale of redundancies that we're now seeing in the economy. That it's exactly what this scheme is being brought on tap to try and mitigate and
Yes.
slow down. But it does, I suppose, require employers potentially to put in place some sort of bridging funding if they're struggling for cash, so that they can get through to that point where they can draw down this support.
Yes, absolutely. So our understanding is that an online portal will be set up where employers can submit information about the employees that have been furloughed and earnings and other details, etc. And the hope is that first grants under the coronavirus job retention scheme will be paid within weeks. And certainly they're hoping to have that portal up and running before the end of April. I think for those who are, for the many businesses who are going to be left in the position where they need to get their hands on some bridge funding, if you qualify, I think probably the most obvious direction to turn will be the coronavirus business interruption loan scheme, which Sharniya has already talked us through.
I mean, I think where for the conversations I've had over the past week or so, the implementation of this gets quite complex. Is that you clearly have quite a straightforward scenario in some businesses where either the whole workforce is effectively being furloughed, or you might say out of a staff team of 10, you're going to furlough 3 or 4 staff, given the contraction in your business. But there is also a reality that in some businesses, you need the skills of everyone in your team of 10, and therefore you actually almost want to be furloughing your team for 30 or 40% of their time, rather than picking off individuals. And I think that's where many businesses will be looking keenly, hoping that there is some sort of some more nuanced interpretation of the application of this scheme that's possible.
Yes, I agree with you. I mean, I've had a couple of clients this week express concern along those lines, really. If I furlough someone, does it mean that I can't even email them, for example? How do I keep them informed with what's happening in the business and stay in touch? So many practical points to be clarified, but hopefully that detail will come through this week, and therefore a very powerful measure.
And indeed, I think also kind of big questions for the non-profit and charity sector, as to whether it might be acceptable in that context for furloughed staff to then decide that they want to volunteer back to the charity, because clearly that time and productive effort that they'd be sort of recontributing isn't necessarily benefiting, I suppose, private shareholders, but it is benefiting the beneficiaries of a charity, let's say.
Yes, exactly. And of course, many people who are workers who would fall into this bracket are probably very busy with their own family responsibilities at the moment, aren't they? We go back to where we started with just the number of things that are on people's mind at the moment, and the number of different balls that they're trying to keep up in the air.
Indeed, I'm having sort of conversations with parents who are perhaps doing shifts at home. So Dad might sort of start the working day, then takes over childcare, and then picks up the other half of their working day in the evening. So lots of creative solutions being found.
Yes, no, agree completely. That's certainly what's happening in my house. And I did note yesterday that recognising fractions for our Year 3 daughter turned into a very fun trampolining session. So lots of flexibility in homeschooling styles.
So some new joys to be found too, which is good to hear. Now, Pim, I wonder whether any questions have been coming in from our viewers, or whether everyone's very shy this morning.
Yes, absolutely. We've had several questions through now. One for Sharniya. If a company is insolvent but still trading with 32 employees, could they be eligible for the loan scheme?
I'm really sorry, Andrew. I can't hear Pim, so could you repeat the question, please?
Pim, can you run that past me again, because Sharniya couldn't tune in, and I think I may need to just process that again too. So for a second time.
So if a company is insolvent but still trading with 32 employees, could they be eligible for the loan scheme?
So they're insolvent, are they? But with 30 employees. That's and so all right. That sounds well. I suppose for some businesses, sadly, are the sort of complexities that we're faced with now. So, Sharniya, a company insolvent but still trading, with around 30 employees, could they be eligible for the loan scheme?
From what I understand, it's for businesses that are trading and will be continuing to trade. It might be, I think that's something that's probably worthwhile picking up with the bank. I'm not 100% sure of that. I can come back on that question and maybe circulate an answer later if that's okay, because that is quite specific.
That would be great, Sharniya. But certainly, my reading of the intent of the loan scheme is the same as yours. That it could be quite difficult to fit a company with those underlying instabilities into this scheme. But certainly a good question, and one that we will probe a bit further. And as you say, pick up with the relationship manager at your bank and get their view, as that's clearly critically important. You also, of course, do have the option of getting a second opinion from another bank. So, Pim, our next question, please.
Companies House have announced a 3-month extension for accounts filing. Is there anything similar for VAT filings in consideration of the VAT payments deferral?
So that sounds like a question for Caroline. That we've had the announcement from Companies House of a sort of 3-month extension for filing one's accounts. So the question that's also come in is, might that extend to VAT as well? Could you get a 3-month extension for filing your sort of VAT information, I suppose?
So I haven't seen anything on that in the measures that have come through, but I'm not a VAT specialist, so I'm not close to VAT compliance requirements, but I haven't seen that come through, and it's certainly not something that I'm hearing when I'm talking to my clients, that that's been communicated to them directly.
Yeah, likewise, neither have I. And can you remember whether it's 3 or 6 months, that extension that we're getting now from Companies House? It's there's so much information coming through at the moment. It's difficult to keep up.
I know. Yes, agreed. Yeah.
Well, I think on both those fronts, there's definitely some follow-up detail that will circulate for those that are getting into the nitty-gritty of whether there's a conversation to be had with HMRC around an extension in your VAT submission. But there's clearly a logic there that if we're all kind of struggling to kind of keep up with our management accounts and kind of end-of-year returns, that does then tend to flow through to one's VAT management. Now, I think we're going to pause there on the questions, and I'm going to bring in, for a bit of a sort of shift in direction and sort of change in topic at this point, Jamie from insurers Verlingue, because I think insurance too is inevitably front of mind for a lot of business leaders at this time. I know in our own board of directors at West London Business, it's been on the agenda for our recent board meeting. So I think we're going to explore with Jamie over the next 10 minutes or so. And we're going to bring up on screen some of the themes I'm hoping that we can cover off fairly quickly. Business interruption insurance, what's happening there. Unoccupied premises, what we all need to be thinking about. Remote working, its implications for insurance. Layoffs, redundancies. What does that mean? And then also, if you have issues cropping up with forecasts moving around significantly at this time, how is that best handled? So a warm welcome, Jeremy. I wonder whether you can kind of kick off by sharing your thoughts on the business.
No feedback for 1 second.
Okay. Few issues with Jamie's audio link, but hopefully that will settle down, and he'll be able to tell us a bit about business interruption insurance and how it'll be possible to make a claim, if it'll be possible to make a claim following the outbreak. Jamie. We seem to have lost Jamie, so I'm going to pick up my long-running conversation this morning with Caroline. Jamie's back. Jamie's back. Brilliant. We've got our live link with Jamie again. So business interruption insurance, Jamie. What are your thoughts on the potential or not of making a claim following the outbreak?
Yeah. Hello, everyone. And that's a really good question, Andrew. Actually, it's actually the question we're getting most often, and the government, solicitors, accountants seem to be providing quite a bit of advice to businesses around business interruption insurance. And what I would say is, with respect to the advice coming out of that, is speak to your insurance professional, because it's not clear cut as maybe some is being reported out there. The truth is that it's quite unlikely that you'll be able to make a business interruption claim for the COVID-19 outbreak. And the reason for that is that within most insurance policy wordings, human infectious disease is actually specified. And as you'd imagine, COVID-19 is not actually a specified disease, and that's because, a few months ago we hadn't even heard of it, so insurers couldn't write it into their wording. There are one or two policies out there that don't actually specify human disease, and they encapsulate any human infectious disease. However, they're quite rare, and the ones we're seeing tend to be capped within a limit. So the truth is that making a business interruption claim following this outbreak is probably not going to be fruitful for many businesses. What I would say is that I'm speaking quite generically, and the people to speak to are insurance professionals on this. If there's anyone out there that's unsure, I'm happy to maybe check for you. You'd have to have a look in your policy wording. There's a few areas that you need to look at. So, if anyone out there wants me to have a look, please just ask Andrew for my contact details.
Thank you. That's a generous support, and you might have a flood of emails now from viewers and WLB members asking you to pore over their policies. But I suppose critical really that folk, if they are unsure, talk to their broker and kind of start to get into the nitty-gritty of the policy, but maybe also seek an independent view. I'd imagine too that moving forward this could be a focus for a lot of people in buying new insurance, that we start to think more broadly about the risks that we need covered.
Correct. Yeah, I think in general most policies do have an infectious disease extension. However, as I said, it is specified, so unfortunately COVID-19 is not on there. Some policies may well start moving away from that. However, it's important to remember that if everybody out there, everybody has suffered following this outbreak. There's not a business that has been protected from it really. And if the insurance companies paid every single claim, there actually wouldn't be an insurance industry after this outbreak. So no one would actually be able to get insurance. I think that's key for people to remember.
And I suppose what we're seeing, frankly, in the all the schemes that we've talked through this morning that the government is launching, is in effect society as a whole kind of self-insuring and getting money back into the economy now to make sure that it keeps moving forward. Now, the next theme that we were going to I think sort of challenge you on was this question of unoccupied premises, because of course we've now got so many people working from home. How's that likely to affect our policies?
Yeah, it definitely will affect your policies, and within all policy wordings there's something known as an unoccupancy condition, and within an unoccupancy condition within a policy, they're quite strict parameters, and at the moment the typical parameters are, if your property is going to remain unoccupied for 30 days, then you need to make some provisions within the property. You need to check it regularly, potentially shut off water, gas, electricity. and even make security provisions. What I would say is we've challenged, as a business, Verlingue have challenged the insurers on behalf of our policyholders to negotiate more favourable terms in that respect. We don't know how long we're going to have to stay away from our offices and businesses, and 30 days might simply not be long enough. And more importantly, the provision around checking the property regularly might just be unworkable. We all might be, isolating and certainly on lockdown. So what I would say is, again, your insurance professional out there should be challenging the insurance companies to relax this where possible. And we're certainly seeing insurers helping as much as they can in this respect. And typically we're getting that extended to 90 days and even the provision around checking the property regularly relaxed. So again, let your insurance company know, let your insurance professional or insurance broker know, and ask them to seek extensions to any unoccupancy condition. And importantly, ask them to ensure that full cover continues, because quite often cover will be reduced when the property is unoccupied. So again, ask them to get full cover maintained whilst you're not occupying your business premises.
Very, very helpful, Jamie, very helpful. Now, of course, as we said, lots of us now working from home. How is business insurance affected by that kind of shift in our sort of working patterns?
Yeah, I think realistically, what we're seeing is a lot of people saying our employees are taking laptops and computers and screens home, and obviously that is not covered in the homes of your employees. When you set up your insurance, fixed office equipment is insured in the office only. So again, it's important to speak to your insurance brokers and insurance companies and let them know that office equipment is leaving the business premises, it's going to the homes of your employees, and ask them to extend cover for that. Really, what I would say is that from an employer's liability point of view as well, that as businesses, you all still have a duty of care to your employees. So it's important that even if they are working from home, that you check on them regularly. You offer them any help and support whilst they're working from home. Mental health is a big issue, obviously, at the moment, and especially employees that are working in isolation, potentially on their own. It's important to pick up the phone to them and mention to them that you're still thinking about them. It's not out of sight, out of mind, and reassure your staff as well that you're looking to keep everyone employed.
Really, really helpful reflections there. And in that sort of worst case scenario, which I think one of our sort of questioners was sort of alluding to earlier, where companies become insolvent, maybe they then have to move to just simply not trading and closing their doors. Do you cancel your insurance cover? Can you get any sort of refund?
I mean, technically you can cancel your cover, but what I would say is I personally wouldn't say it's wise. We don't know how long this is going to last for, and the first thing to mention is cancellation conditions within insurance policies can be quite heavily weighted towards the insurance company. So you could cancel your policy, let's say you're 6 months through, and you could cancel your policy and get a 25% refund, for example, and then in 2 or 3 months time you'll need to set up that cover again, and it actually was financially unviable cancelling it in the first place. The other thing to mention is there are compulsory insurances out there that by law you must maintain. So motor insurance and employer's liability insurance, for example, you must continue to maintain those. And lastly, management liability insurance is vital. In these times, management liability will cover claims, directors and officers claims, and employment practice liability claims, which are claims made by your employees against the business, which could happen if you're laying staff off, for example. So it's important to maintain these covers that are going to provide you with legal defence costs as well.
And of course, quite a few businesses, may well move into that not trading status for a few months. Hospitality firms, for example, where they're furloughing staff, but of course, as we talked about earlier in the programme, those staff are still on payroll. So as you're sort of pointing to, important to maintain that employer's liability insurance through that sort of furloughed period.
Yeah, definitely, because we don't really know how that's going to be affected yet. It's a unique situation for all of us, so really important to continue to maintain compulsory insurances and any insurances that are going to provide you with legal defence costs. And
a final question from me before I perhaps see whether any further questions have come in for Pim to bring to our panel. When it comes to insurance sort of renewal, where obviously you kind of share various kind of forecast figures on business turnover, payroll, etc. If that shifts, can that data be adjusted with your insurer after renewal?
Yeah, this is something that we're really getting involved in at the moment. We're trying our best to help our policyholders. And as you mentioned, Andrew, businesses generally provide wage roll turnover and gross profit or gross revenue figures when they renew their insurances. And that would have been based on a much more positive outlook for most businesses. So what we're doing to assist our clients with premium reductions is asking them to readjust their figures and obtain return premiums. Obviously, if your renewal has been in the last few months, that will certainly be of benefit. And what we're finding is insurance companies are being very helpful in this respect and providing return premiums to the policyholders, because essentially, they are not looking at such a positive outlook now, and the premium that they paid was based on that outlook. So it's only fair that following this downturn, they pay the relevant premium for that. So definitely get in touch with your insurance broker and speak to them and say to them, look, our outlook is less bleak. Can we reduce our estimates? What I would quickly say just before I finish is there are a couple of other insurances. Motor insurance. What we're doing at Verlingue is speaking to our customers that have big motor fleets. I know there are a few out there and potentially a few listening, and a lot of people aren't using vehicles at the moment. So if you sawn them off the road with the DVLA, you can actually get a reduced premium for that, and we can reduce cover. Somebody messaged me on LinkedIn, a listener messaged me on LinkedIn yesterday and asked about travel insurance. Again, it's important to mention that travel insurance is still paying medical expenses claims, but only if you're travelling in accordance with government advice, which isn't to many places at the moment. No. So yeah, definitely speak to your insurance brokers, speak to us if you're not sure. We can help on any of those points and helping reduce your costs.
Thank you, Jamie. So kind of clear message there of kind of thinking broadly, thinking across the full range of insurances, and just kind of exploring whether there are perhaps some sensible savings to be had. Now, I'm going to just finally turn back to Pim for one last question, perhaps, to our panel.
Hi, Andrew. A question for Jamie. Is it possible that insurers will put the premium up if the property is unoccupied, but the business wants the full level of insurance?
So did you catch that, Jamie?
Yeah, I caught that. Look, I would say that it is possible. However, I think it would be very unlikely in these times. What we're seeing is insurers being very helpful indeed. Certainly, we've got very good relationships with our insurers at Verlingue, so I think a lot will be bound by that. But no, I should hope that an insurer would take a positive stance, and if you are going to leave your business premises, if it is going to be unoccupied, they should keep cover the same and they shouldn't be increasing the premium.
Thank you, Jamie. I'm afraid our hour is up. A huge thank you to my production team at West London Business, Pim and Janelle, and Joel at Revolution Audio. thank you particularly to my panel this morning. Caroline Bevan, Senior Partner at PwC, Sharniya Ferdinand, Business Inclusion Programme Manager at NatWest, Jamie Barham, Client Director at insurers Verlingue, and you're almost with us, Robert. You almost managed to make it into the studio, so thank you so much for trying. That's of course Robert Moore, Managing Partner at Grahame Murray. Now, don't forget, our web support of course remains live, and at the end of the programme I think we'll be bringing up on screen a reminder of the web address to go to, as well as the web address where you can share your thoughts with us on how we continue to adapt our business support for you at this time. But above all else, can I say stay safe, work at home wherever you can, unless you're a key worker, and do join us again next Tuesday for Talk at 10, when we'll be discussing how to go about leading and coaching virtual distributed teams during this crisis. Thank you.